Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. You are listening to Money on Tap. My name is Seth Krussman.
And I'm Ben Brayshaw.
And you can reach us at 855-226-8551 or info at Your Money on Tap. And you guys, we have got a show lined up for you today. And it even includes some pretty threatening language in the title.
Goodness gracious, Seth.
It is. It's pretty hardcore. We have got the 7, count them, 7 deadly signs you need a financial advisor. And I gotta state that with a little bit of caveat. That's what Ben and I do. So we're financial planners. If you're new to the show, you're like, who are these guys? Why are they talking about this? Well, that's what it's about. We're financial planners. Brayshaw Financial Group is our company. Money on Tap is our podcast and our radio show. And we're going to tackle some things that you, our listeners, and our clients bring to us, and it's the common stuff and it's the not so common stuff that people just never even think about when having this idea of retirement or how do I be successful with my finances?
Yeah, Seth, there's a lot of, I'm sure some people listen and say, well, of course you're financial advisors, so you're going to give a spot to yourselves. We do a lot of shows. If you're new to our show today, we talk about the market, we talk about current events and what's going on and ups and downs, and we're gonna break into money in the news here in a minute. But once in a while we have to talk about this, and you don't need to call us. We recommend you call anybody in these worlds with what's going on. And I'm really excited because there's some real signs that people need to hear that say, hey, should I be doing something different? And I think this is going to be a really valuable show for some people today.
Wonderful. Without any further ado, here we go, you guys. It is time for Money in the News. Ben, why? Why are factories so strong in a pandemic is article number 1 coming to us from the Wall Street Journal. And a question that I'm sure many people are scratching their heads if they're paying attention to what's going on in industrials. And it's been a really, really super strong sector in our economy. And they did a great job of outlining what they think is the reality behind the numbers here in this area of our economy that's just been doing incredibly well.
Yeah, the Institute for Supply Management. This article is written, first of all, by Justin Lahart, and the Institute for Supply Management, he quotes, on Tuesday said that its index of manufacturing rose to 56 in August from its a high in July of 54.2. Now, for people who are hearing these numbers and saying, what does this all mean? Basically, anything over 50 represents an expansion in our economy, and that's probably surprising when you're saying, hey, we're coming out of a pandemic and all this stuff is going on. There's just so much stuff going on in these factories, and they're rocking and rolling. And, that hasn't, we had a slight hiccup in the middle of this, but I think the demand, I've read a number of articles in this area, Seth, and I think the demand was so high before the pandemic that a lot of it's still passing through. People have obligations to finish building contracts and so forth. So factories are making up for a little bit of dead time. But he also mentions in here that part of the stimulus package that was sent out was actually, there was a number of people making more money off the stimulus than they would normally from regular employment, and that there is a lot of money coming out of that towards the various purchases of shopping that is driving some of this factory growth and factory expansion. What do you think, Seth?
Well, you mentioned driving, and I think that that's of note. People are now buying cars, and they're making plans to buy that they're planning to buy. But since the COVID hit, they've kind of gotten back on track, and they've said, well, we still want that car. And guess what? The auto dealers are offering some pretty good incentives out there. Read a Dave Ramsey article that said the other day that even if they're offering you 0%, buying a new car isn't a good idea. And the consumer says, no, we think it's a great idea. We're going to buy cars.
Yeah, it's funny you say that because I heard there was some statistic, and I don't know what the numbers are, but it was a ridiculous number of people from New York City were buying vehicles just to travel because they didn't want to fly. Trains and public transportation were a no-no. But getting a car for the first time because all they did was rely on public transportation was a big deal. And I think that's very interesting. That driving force.
Driving force.
Sorry, no
well,
pun. Sorry for the bad pun. Number
driving.
2. Let's zip on to number 2. All right. So, folks, here, this is something that I think is going to really be of interest to a lot of people because Amazon is a household name to almost everybody, and it is a stock that has just skyrocketed this year. But Walmart, which is a very well-known competitor to Amazon, is now getting into the delivery space once again. Now, Walmart has created Walmart Plus, and it's going to be $98 a year for the membership for delivery, and it's going to be at home delivery. They're basically taking on Amazon head first. I mean, this is a pretty big deal. Walmart's probably got the largest capacity and ability to do this, probably the most likely to have success doing it, in my opinion. But they've tried this once before, and they've been unsuccessful, Seth. I mean, that's, I think, probably the surprising piece.
Tell me more, because that's not something that I had in my quiver here to discuss. They did this once before, and it just didn't. It didn't work. Yeah.
So they had a test round in the past, and man, maybe I read that somewhere else. But anyways, they had a test round, and they did this, and they did I think it was like a $35 fee, and it turned out to be a complete bust. And then the only thing that they ever kept from that test round was that anything over $35 in a cost would actually still be delivered for free. And they just use regular delivery for that from an online shopping piece. So that was kind of an interesting, I don't even know where it must be an article I read in accordance with this. But this is a big deal. Now, Walmart stock is expected to move off of this. I've heard a couple different analysts speak about that publicly, and they're very optimistic across the board that this is going to make a move. Now, how that actually plays out, I don't know. They failed once before, but Walmart has probably the biggest, strength to manipulate sellers to help buyers afford things and cover delivery costs and so forth. But the cost of actually shipping is fairly expensive for them. I think one thing, though, inside this Amazon world is that Walmart and all these big chain stores, they have this massive infrastructure overhead that is super costly. That's like these box stores in popular locations and shopping areas where Amazon is buying these rundown warehouses for dirt cheap in low tax areas that are near the outskirts of an area and storing, fixing these things up and storing their stuff in there, and then they're traveling around. The infrastructure cost is significantly different. Now, I think that's a major piece to how Amazon creates affordability around this, where these big box stores have this massive overhead that Amazon doesn't. And that brings me to an article that we talked about, what was it, last week or the week before, about Simon Property Group, Seth. Did we talk about that? In Amazon looking to take on a box store location as an anchor piece and maybe have pickup locations. But with the amount of mall locations that are just kind of dying around the country, they're getting that for cheap as well. And Simon knows that that's going to be an attraction for people. I don't know.
So Walmart has done incredibly well over the last year. It's picked up, I think, 97%, jumped from 97% from a year ago in its e-commerce. And one of the things I notice is anytime I'm shopping for something, just put in Google this, Google that, and right there at the top, you're going to see something from Walmart, usually trying to vie for that space in your purchase and your opportunities. They have the distribution, they've got the warehouse, they've got the capacity to make this thing work nationally, far more than anybody else out there. And I think something to me that's kind of interesting is the positioning of what they're doing here is we're your neighborhood. Like, we're your neighborhood stop and shop place where you get your gas, you get your all your other stuff, and we're the good guys. Whereas, just go back a year ago, they're the ones that are gobbling up all the little neighborhood stores and grocery and retailers out there, and they're the bad guys. But no, it's Amazon that's bad, and we're good, and we're going to come and we're going to bring you your goods because we're the neighborhood guys.
Yeah, no, it's really funny how they've repositioned this. It's true. It's true, and they've actually done a really good job of it. Because they're the small dog compared to Amazon. Amazon's the big bad guy now. But you know what's really interesting? I never saw anything in this article about a video subscription provided or anything.
Oh, but we're gonna get there. We're getting close in just a second. Because next up on our
wait. Okay. I'm just wondering. I'm just wondering if Walmart Plus, which has the plus symbol, is going to be like Apple Plus or Disney Plus. Like, is there a connection in there that's going to be linked here in the very near future that you're going to get? It's got to be.
It goes without saying, almost, right? They've already got the pharmacies and they've got everything else, but to be in this space where they're competing, they really have to be there. So one of the places that they're in talks is with TikTok. So TikTok deal, right? Yeah, if you're a fan of social media or not, this is just I've had conversations with people that haven't even heard of TikTok, and it is the fastest growing social media platform out there. And but it's from China. Now, if you've been watching or paying attention to anything Trump says or is out there in the news, this is one of his kind of sound bites out there, is that TikTok is no longer going to be doing business in the U.S. unless they are U.S. owned, and there's kind of a threat of or national security or what do they have access to? TikTok has access to. So who are the people that are coming to the table with a couple dollars in their pockets to buy TikTok? I think it's $30 billion is what the offer looks like these days. And what is the hiccup? Well, and who are the players? So it has been Oracle, it has been Microsoft, and it has also been none other than Walmart. So, and they look like they're right now. Walmart looks like it has been the strongest of the contenders, teaming up with Microsoft. The problem here seems to be that not only is it the name and is it the platform, but there is an algorithm that is proprietary to TikTok that really sets it apart from what a lot of other social medias are doing. They all use algorithms. Anytime you go onto Facebook, guess what? It's advertising to you, and that's what it's about. This is sucking you in.
Yeah, this is amazing. I mean, I was reading about this, and basically, this Chinese company ByteDance has figured out how to create these short video clips. Well, the video clips are created all over the world, but they've figured out how to link these things together. So the more you watch and you like, and I don't even know, I've never even used TikTok. I know my children have and stuff like that, or my kids, but they'll watch it. They'll watch it for an hour like a TV show. I mean, it's crazy. It's got ads. It's got everything. They don't even care. And I hear my daughter, she's 19, laughing hysterically over this stuff. And I mean, my kids are like coming over, Dad, you got to see this thing, But it has some sort of algorithm, some way it knows, like you don't like this, you like that, and they know how to stream repetitively, almost indefinitely, for stuff and information to keep you attached to it. Because if it was boring, you'd just be like, oh, this is stupid, right? But they've got it down, and honestly, people are saying that this algorithm is the deal. Like, that's what everyone really wants is, how do they read into the human mind differently than every other algorithm out there? Because, like, how many times you go to, I don't even have a Facebook account, but my wife goes to Facebook and it's like, hey, this is an ad that she's interested in. They figured out like, hey, what you click on and so forth. And how many times you open up, like I have a Instagram account. How many times you open something up and you say, I was just talking about this 20 minutes ago. Like everyone who's listening knows that that's true because you're like, this is eerie. It's listening to me or something. And that could be true too, but there's also, some sort of connection around there. There's some cleverness, but this algorithm that TikTok has created is out of this world. It's very, very unique technology.
Well said. And as said by others that are in the industry, Mr. Wei, who has worked at Facebook's Oculus and Amazon, says when you gaze into TikTok, TikTok gazes into you. And that's, I think, one of the things that, like you said, like that hour is gone before you know it because they have really captured your attention and done it so well.
I'm just hearing the Twilight Zone kind of soundbite clipping through the back of my head right now as you said that.
You want to know what one of our discussions with the 4-year-old Julian at our house was this last week was whether or not Alexa is a real person or not. And I have to guard myself when I say the A word Alexa around because we've got an Echo Dot over here and something else. And the next thing I know, she's talking back. But he's convinced, and he actually pointed out that we know somebody named Alexa, so she's a real person.
That's funny. That's really funny. Well, that's going to do it for Money in the News. We're going to be right back with the 7 deadly signs that you need a financial advisor. I'm excited about this show. I think it's going to be valuable for a lot of people listening, wondering, when is it the right time to engage somebody? But if you want to reach us, we're at 855-226-8551. And you can reach us at info@yourmoneyontap.com.
Hi, my name is Seth Krusman, partner with Brayshaw Financial Group and one of the co-hosts of Money on Tap. One of the biggest concerns and largest expenses people face today is taxes. Without thoughtful planning, taxes can destroy future retirement dollars, eliminating the possibility of a timely retirement or dreams of what you want retirement to look like. If you're like most people, you're getting closer and closer to retirement, and you may be wondering if you're taking the right steps. Will my income be enough? Will rising taxes force me to give up my dreams? How does inflation factor into all of this? These are real concerns, and you're not alone. Putting a plan around your financial future is what we do. If you have questions when it comes to your financial security, and if you're looking for a personalized solution, contact us at Brayshaw Financial Group, 855-226-8551. It's time for you to start getting answers to your questions. Headquartered in Bedford, New Hampshire, Brayshaw Financial has offices across the country. We'd love the opportunity to show you how we can help. There's absolutely no cost or obligation to meet with us. Call us at 855-226-8551. 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You are listening to Money on Tap. My name is Seth Krusman.
And I'm Ben Brayshaw.
And you can reach us at 855-226-8551 or info@yourmoneyontap.com. And we're going to jump right in to the main topic today, which is 7 deadly signs you need a financial advisor. Now, full disclosure, Ben and I are financial planners, and we're fiduciaries. And that's what our practice is based around, is always maintaining that fiduciary relationship with our clients. Okay. So the information that we're going to cover is really just, we could probably come up with a list of 20, but this is the amount of time that we have here.
I just really like the title, Seth. I think it was a clever title.
Well, that was all you. So go, you keep patting yourself on the back there.
I like this. I like this. I like it a lot. And I'm really excited. I told you, Seth, I've had a number of people come. We've had people come in off the radio. We've had referrals. We've had a lot of stuff happening during this pandemic. And I really, when we were working on this show, I just really felt like it was so timely because there's just almost every person had like one, they had like 3 or 4 of these things, but it was just kind of like every one of them was hit on regularly on some level. And I'm pretty excited about the things because I think it's going to speak a lot to the average listener in a lot of different ways about when to make that first step.
Are we going to dance around the topic? Or are we just going to jump right in?
I'm going to jump in with number one here, Seth. I'm going to go right for it.
Okay.
This is something that I hear almost every time. I would say good 80, 90% of the time I hear someone say to me something along the lines of, my gut's been telling me I need to talk to somebody. I need to take some action, or I keep putting this off. This is like the number one thing. People know intuitively they're there. And, they have this kind of, I hear people say, hey, I listened to your show. I should have called you last year. Someone gave me your name a few years ago, and I know I should have done something then. I'm late to the party. And I always tell people that, you can't just walk in with regret. We just have to pick it up and move forward. But I would say number one is that, you have this kind of underlying feeling that something's not right.
Yeah, sometimes that takes time to get to the point where you're either recognizing that that's what's going on, okay? And in hindsight, it's always so much easier to take a look and say, yes, that's where I was at a year ago, 2 years ago. I mean, we've all done this, but you don't have to wait until January or December 31st to make the decision to understand more about what your options are, because that is really I kind of put it into a nutshell. If you're going to take a look at a really first layer of working with a financial planner, it's understanding where you're at. Everything has to come from that point. And so many people are even in a guessing game around their current financial situation. And how are you going to take the time to build the model that articulates ultimately what you're doing today and what that looks like down the road, and what maybe making a subtle change here or there could look like. And that's a very, very first layer, I would say. And your gut is probably telling you no, you're not. So get on board. Sit down with somebody that I would say is a fiduciary, right? Has your best interest at heart. It will communicate with you in a way that you can start to understand where you're at right now.
Yeah, Seth, I think one of the things that I would probably reverse on the statement here is, what is the thing that's holding you back when your gut says, I need to do something? And, I would say that there's the few things that I think that are kind of the reverb in that background of that conversation that's going on is, one is finding someone you trust, right? You don't know who to go to, maybe. Or even if you have a couple of ideas you want to go to, there's that feeling of like pride, or creating this moment of humility where you just kind of, I need help and there's nothing else I can do, hoping that it had worked itself out. For some people, this is a pride issue. I don't know why. It's kind of like, this is all of your finances, but how many times do we walk up to the guy at like Best Buy and ask him about TVs because we don't know everything about TVs, and he's like, just got out of high school, That's not a pride issue for us. So why are finances? It's almost like it's presumed in some mindsets that you should just know and be completely competent in this, when, our schools don't teach any of this stuff, I would say, for the most part. But there's always this background conversation that's holding you back. And I think, honestly, identifying what those items are when that gut is telling you need to do something is probably the best way to figure out what it is that's concerning you the most.
I love it. Yeah. Get unstuck. Quit beating yourself up. Quit looking back over your shoulder and saying what I could have had if I only would have, should have. And just take that step, and you know what? It's not every step initial step has to be perfect. It's about taking the action. And that's, if you can get there, you're doing it. And we just encourage you to be grateful that you are. Number 2, you are a high income earner, and you are in or near a top tax bracket.
Yeah, I think this is a key one. I know I just interrupted you. Sorry, Seth. I think the thing is a lot of people think, hey, you know what? I'm not in that top tax bracket. I'm but when people don't realize that those marginal rates continue to climb as you make more and more money, you could have a small portion that's hitting a higher tax bracket than normal, and that's a big issue.
Yeah, there are so many strategies that open up kind of as you start climbing through levels of income that really nobody but a financial planner or financial advisor can really bring to the table in a lot of circumstances for you. And if you don't have access, if you're not working in these areas to try to mitigate some taxes and, work through these situations on a daily basis, how would you know? You're probably not going to Google it and find the advice that's really going to make sense for you, or be able to, or take the time to model. You'd be able to, but I mean, it would take you quite a bit of time probably to model the numbers in different scenarios, but at least you can start to grasp what the decisions are and get options to the table that you can take a look at and start to understand where you're at and what some of these options start to play out.
The large focus of our practice is on tax incentive planning, and we're evaluating, building, and creating, things to mitigate taxes and working with your CPAs in that area. This is one of our top tier things that we do. That's probably our specialty. And if you're that person, we would probably be a good company to call, people to work with. But this is something that if you are that person, you need to make sure whoever you do work with has that understanding. Not just finding somebody who does, financial advisors and financial planners, they are two different realms. And then when you actually get into, making sure you're working with a fiduciary and that they have these unique specialties, that's an important piece. And, sometimes you're going to find almost every time you're going to find somebody works in one domain or another, largely. And, if they're working in a domain that is not a good fit for you, it's never going to be successful no matter how much they care about your needs if they don't understand how to solve your problem.
Number 3, you and your spouse can't quite get on the same page. You're not connecting. And, I was just having a really great conversation with a friend of mine yesterday about just what a challenge it is to even get on the same page with parenting. And that is something that we're working in 24/7. But we're each coming to the table with our experiences, right? With our kind of pre-decisions. Some of these decisions are already made for us. How are we going to relate to finances even because of how we were brought into the relationship of finances? It's very similar with our children. But here's a difference for you, right? Is that you probably are working on trying to work on solutions with your children 24/7 because they're there all the time needing something, and you're trying to figure it out, and you're trying to use everything of your experiences to get the best solution in place. And with your finances, it is just not like that. You get to a place where you have a problem, and you can be at loggerheads real quick without having somebody in there to understand where each person is coming from and how they're making the decision they're making, and they're doing it from the best place possible, the best place they have possible to try to make that decision. And that's a real challenge.
I would take that to another direction too. I mean, I know what you're kind of alluding to, the everyday conversation, husband and wife. What are we doing? How do we want? How are we going to make this bill work or that expense work or save for this? And those are one piece. One of the other sides of this story that Seth and I deal with, I think, is just getting people on the same page about retirement. It's amazing how many people know that each other want to go to Paris, or somebody wants to do something in Tahiti or something, and they know a couple trips and so forth. But it's amazing to me how many people don't have a real conversation about what retirement looks like and the difference between dreams and reality. And, I can't tell you how many people I've assigned to go out to dinner and spend the entire dinner talking about retirement and what you want your retirement to be like, where you want to be, where you want to live. Are you going to move when your kids move? Are you going to, When grandkids happen, is one going to travel and one not? Is one unable to travel frequently or often via plane? There's just all sorts of different pieces that just are significantly detailed in retirement. And yet we talk about saving for retirement. This is this huge financial crisis that's in the background that people want to work with and talk about and make happen in their life. And it's this dream. It's this beautiful thing we envision having in our lives together. And yet very few people know what each other want. And so that's an important issue that we have to kind of address. And we really encourage people to connect, because connecting on finances is not just like, hey, it's these bills, hey, it's retirement. It's all the steps along the way. And sometimes what I find myself doing with clients is working through kind of the struggles of understanding pros and cons, where a husband and a wife might be in complete disagreement, and neither are wrong. And neither person is wrong. And kind of having a conversation with myself and them has helped a lot in trying to mitigate, unforeseen perspectives and kind of pros and cons and having that forward thinking. I mean, being in this business, 20 years or whatever it is now, and working with thousands of people in conversations, it's just interesting to me how many people are just not connecting. Not that either one is right or wrong. Now, sometimes someone is right and someone's wrong, kind of in a certain circumstance, but usually there's kind of a middle ground to be found.
It's so much of the conversations that happen, or where people get disconnected in this, is they're in that tactical place with each other. They're trying to really address the elephant in the room at the moment, right? And doing their best to tackle that. And one of the ways that we can really try to change that dynamic is get that bigger picture and get strategic about it. And I think that's what I'm picking up from you, Ben, is really getting those big goals in place, those things out there in mind, and setting up the other pieces to be able to address and accomplish those goals. And a lot of the time what will happen is that current elephant in the room gets addressed in the process in a way that just wasn't possible, 5 minutes ago.
Well, people say to me that, well, you're a financial planner and you know the answers on this stuff. I would say that my wife and I do not agree on everything financial. She has her perspective. She grew up with a certain set of, rights and wrongs to do with money, and I grew up with a different set, and I've been trained with another set, and so there's things that we don't agree on, but respecting those opinions and trying to understand where we invest in the market. Like, we buy the market every day. I understand those risks in a way that she does not. My wife would be fine sticking it in a CD if she felt like that would solve her financial needs. But, those are just different perspectives. She's super conservative. So balancing that in my household, it's still something you have to mitigate. The person's opinion and perspective is completely valid. It's something that needs to be worked through and try to find that balance. And we do that every day, which is, something that we work through for people all the time. And that's a real thing, that if this is going on in your household, this is something that you definitely need somebody you trust and understand and can get advice from, that you both will work with.
Folks, we're going to take a quick break. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And when we come back, we will get to the final 4 of 7 deadly signs you need a financial advisor.
Hi, my name is Ben Brayshaw, one of the co-hosts of Money on Tap. If you have questions when it comes to your retirement and are looking for a personalized solution, contact us at Brayshaw Financial Group. In today's volatile stock market, we can help you plan to find your successful retirement solution. Am I saving enough? Am I saving into the right places? Do my investments match my appetite for risk? Do I have a tax strategy that is going to help me keep more of what I earn? How can I maximize my Social Security income? If you are like most people, you are getting closer and closer to your retirement and may be wondering if you're taking the right steps. If you're in retirement, you may be wondering, am I maximizing my income while preserving my estate and caring for my family? We talk about all things financial in what we call 3-dimensional investing,
putting a plan around your financial future. If you feel that now is the time to start getting the answers to some of these questions for your own situation, give us a call at Brayshaw Financial Group at 855-226-8551. Headquartered in Bedford, New Hampshire, we have offices throughout New England and across the country. We would love the opportunity to show you how we can help. There's absolutely no cost or obligation just to meet with us, and we welcome you to our office. Call us at 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You are listening to Money on Tap, and you can reach us at 855-226-8551 or info@yourmoneyontap.com. So we are talking about 7 deadly signs you need a financial advisor. With full disclosure, Ben and I are fiduciaries and financial planners. That's what we do at Brayshaw Financial Group. And in all of our free time, we bring you this Money on Tap, which is fun for us. You know, it's work, but it's work that we love doing because we love helping people that are looking to gain an understanding around their personal finances and make that next step, that like really make that next level in their financial planning and understanding. And so what we're talking about is stuff that we see come across our desk and in our offices all the time. And these are cues for you to pay attention to, that if you're having any of these scenarios going on, it's time. It's time for you to reach out to the person that you can listen to, the person that you trust, the person that we would say is a fiduciary as well, to put things in perspective and take that next step. And with that, we're going to jump into number 4. You owe the IRS back taxes. And I think everybody just turned us off with number 4.
I think something just went silent on us.
I felt that, folks.
Yeah, I know. IRS back taxes, they are nasty, nasty, nasty things. And usually they occur by someone either not paying their taxes, but they can occur without people even knowing it, where you've had a good year or and it happens to self-employed people fairly regularly. It's just kind of like, hey, they had a good year. There was some, some non-deductible income that they had, or, there was more meals than they expected. They couldn't write, you can only write off half your meal expenses and stuff. And something pops up and your quarterlies didn't quite cover it. Or, you know what, we just went through a pandemic and business was tight and the money you saved for taxes was something that you needed to use to live. These are realities that we can help you work through. These are things that we can help you try to mitigate and manage through. This is something when you start having IRS back taxes, honestly, whenever you have IRS back taxes, that is a sign you need to get in front of a financial planner immediately. This is something that is not let me think about it. I'm only paying $500 a month or $250 a month or $1,000 a month or $10,000 a month. This is who's the number one tax financial planner I can find in my area immediately so I can start working on addressing this, dealing with this, and managing through it. So one, I can get out of it and get past the next year, because usually this creates a cycle scenario that people, they might get out of it 1 year and then struggle through it the next year, and then maybe they're out and then they're back in. It's a constant ebb and flow. I find this, Seth, I mean, how many times do we find this as just something that's just constantly in someone's life and they can't get out of it? It's a troublesome thing.
Number 5, when and how and if you can retire. One of the biggest questions I think we get is people really just having this question mark of, is retirement a possibility? At what level? At what time? And at what kind of income can I start to look or plan towards? And if there's a goal there, if there's an idea there, what do I need to do to put myself in this scenario to be able to accomplish this, to be successful? And that's exactly right. That is exactly right. That's what we want to. That's the track that we want to be going down to accomplish these goals. And in the process of this, of answering these questions, there's all these other conversations, and I think we kind of we're talking about some of those earlier, where spouses need to have conversations about what time of our life do we want to start to retire? What do we want to enjoy in retirement? Well, there's income that's required for that, and at what level do you feel comfortable in retirement? At what income level? And then is there a hedge for inflation? Do you have long-term care goals or planning that needs to happen? Do you have trust work that needs to happen, or estate planning that needs to happen? And this is what I would say where we would domicile probably around 75% of the time that we would spend with our clients in an initial consultation and working through a plan with them.
Yeah, I think that is, most people do come in saying, I'm really trying to figure out retirement. I mean, that's pretty much the brass tacks on what most people have. And as their number one question, unless they're younger and they're really dealing with some tax issues, this is probably, I would say, the highest majority of people that come in is, hey, I really want to retire. I'm trying to figure out how to retire. I don't think I have enough money to retire. I've had a health issue change. I need to really look at figuring out how I get retired. And I need someone to help me put it all together. This, I would say, this is number one. This is the top number piece coming through the door for people. And I get it. The sooner you start on this, the better off you're going to be. I mean, if you're 62, start. If you're 65, start. If you're 55 or 45, just get started. This is to work with an advisor and try to get yourself to a point where you're moving forward, you've got a plan, you understand what your needs are, what the goals are, because we have some serious issues ahead of us, and those issues are taxes and inflation. And those things are going to come on like a roaring lion, and it's going to devour a lot of people in retirement over the next 20 or 30 years. And that's what all the stimulus is going to cause. And a lot of people aren't evaluating that and not realizing that, hey, sitting out of the market right now is potentially a bad thing. And we're going to talk about the market here in a minute, and how that can be both a bonus and a negative. But if you're wondering whether retirement is a reality for you, or if you're saying to yourself, hey, I guess I'm working till I die, there may not be a choice for you. You may be forced into retirement. That happens to people all the time, even though they think they're just going to keep working and working and working.
So right now, you're wondering, how in the world can I get a hold of Ben and Seth? You can reach us at 855-226-8551 or info@yourmoneyontap.com. We're talking about the 7 deadly signs that you need a financial advisor. And we've got 6 and 7 coming up next, but we probably touched on one of those for you in 1 through 5. So that's what we're talking about. Without further pause for station identification or any of the rest of that, we are going to jump into number 6. There is little or no interest or time to handle your finances. And I think one of the things, kind of jumping back a few into the couple that is trying to figure out and maybe at loggerheads with their finances, we find so often there's one that is more interested in paying attention and really feels like they've got a grasp on this. And then there's the other party that's like, I want nothing to do with it. Really, honestly, if you can take care of that, I'll try to manage this other part of our life over here. And so if we have a couple of people, which does happen occasionally, that there's just a need for some financial education, or there's some need for trying to understand some of the concepts that are going to ultimately bring to bear huge results in a retirement phase of life. Those are the conversations that we are prepared to have in a way, and in portions that are manageable for you, right? Because if we were to sit you down, and sometimes there are conversations like this that are sitting you down in front of a gallon of oatmeal is what it kind of looks like. And how are you going to eat all of that is the question. Gosh, I got to tell you, Ben, you live in New Hampshire. Do Do you just go ahead and grab some of your lovely New Hampshire syrup and make it all palatable? Is that how you candy coat it, or what do you do?
No, you're right. I mean, this is a very common thing that we hear from people all the time, is that I don't want to deal with my finances. I don't want to address it. I don't have time for it. This is not me. This is not what I do. We get this regularly, and if one of you is saying this and the other person's feeling burdened by that ultimate responsibility because the other person's checked out, that kind of brings us back to, number 3, where your spouse and you are not connecting on finances. This is kind of an offshoot of that, but sometimes both the husband and wife or, partners want nothing to do with financial issues at all. They just want to make their money, be told what they have to save, have it drawn out automatically, and the rest they get to spend. They want to live like, hey, we've got somebody controlling this piece for us, and we're going to trust them and move forward. That is very common, very, very normal. Finances is not something a lot of people want to deal with. So 2 people being together, not wanting to deal with it, very common piece too.
If you're listening to Money on Tap, you can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. We have the 7th and final deadly sign that you need a financial advisor. And believe it or not, it's probably one that's there, and a lot of people don't even know it. They're not even paying that close of attention and not realizing that the market is at all-time highs. Why would that make a difference for you and whether or not you're working with a financial advisor? Several. We'll get to them. Go ahead, Ben.
Well, I was going to say, we're in September of 2020 right now, and we are looking at, a year-to-date return of over 9% on the S&P 500. And we went through a pandemic. It's horrible. People lost money. But if you just own the S&P 500, you'd be up over 9%. Now, we would never encourage anyone just to own the S&P 500. That is a large cap investment play. We've done shows on the risk around the S&P 500. But, if I meet people all the time that own that ETF or mutual fund based perspective of the S&P 500, that's all they own. But if you're up 9%, what about just checking out for the rest of the year? If we're talking that people are happy with 6, 7, 8, 9%, we're there. Why not just, if you didn't sell and you just held on, maybe you check out before this election cycle happens and you move forward. Well, what about the NASDAQ? The NASDAQ's up over 33%. The NASDAQ Composite's up 33+% this year to date. Crazy numbers. Just if you had the 2 of those. Now the Dow Jones, a different story, right? We talked about the Dow Jones a few shows ago about what the Dow Jones is. And unfortunately, the Dow Jones is up only 0.5% roughly. And that's for the year. Now, considering all that's happened, pandemic and so forth, and all the craziness, the fact that we're where we're at and that all the indices have hit all-time highs is nuts. It's just completely unforeseen. Why do we consider this the 7th deadly sign? Is because right now there's a lot of market commentary about what's going to happen. September's traditionally a month that does not perform. We're coming up on a lot of question marks. People are buying, what the market's supposedly supposed to be in 2021. There's all this commentary of a pullback, and Warren Buffett's moved money out of the country, and because of inflation. I could find so many articles about taking cash off the table, but the average investor is not. But we're finding that a lot of larger firms are, and that's kind of interesting. Now, that doesn't mean they're selling out and getting out entirely. But even some of our managed portfolios, I think they're about 7% in cash and cash equivalent type holdings, maybe even 8 in some level. And I think if there's a pullback, we're looking for that. We're looking for that opportunity to get back in at a lower dollar figure. You have any thoughts on that, Seth?
Yeah, I do. Timeline's one of the biggest ones that is a concern for somebody that's in that pre-retirement. How close are you to retirement? Are you going to be needing those retirement dollars for a stable source of income? And what are your options to truly create stability for yourself through that retirement corridor? I mean, those are that early retirement phase are some of the most crucial. And looking at a market that is where it's at. If you have let's just say, for instance, you're in the situation where you've got plenty of assets under management, or to see you through a pullback in the market, then maybe this isn't the concern. Maybe you're just a manager and you want to go ahead and take some of that risk off the table and pour it into a cash equivalent for that rainy day. You stepped into the market in say March, right, and you took advantage of the pullback and the market surging ahead quickly, and that was a strategy that you were using. That's wonderful. Most of the retail investors out there are not necessarily in that circumstance, and that's where people start to question what is the best step forward. If you're risk averse, if you're questioning that, then this is possible. This could be one of those times where you start to take some of those gains off of the table and look for the next opportunity. That's a tactical or an active management of what you're doing in your portfolio. There's different ways to do that, though. There are many different ways to do that. The traditional one is you go to cash, right? And you put that into just your money market. The second one is that you're going to go into some kind of bonds. And that's a tool that is traditionally used to diversify the risk of your portfolio or divest risk in your portfolio. A third one could be you're looking into annuities, right? Because annuities or different life insurance platforms have some of those built-in places or structured for some guarantees, something in those lines. And then, then there's your CD, which is the traditional bank version of a guaranteed type of a product, right? And those are historically what most people are going to do.
I've recently seen a number of planners I'm chatting with are using no fee, no surrender fee life insurance contracts with fixed interest rates that people can get out of just to get reasonable rates better than the bank. That's been an interesting, pretty hot topic recently because there's a couple different companies that are really actively engaging in that piece and the kind of the protection piece. Obviously, you'd have to be insurable in that scenario, but that's become hot because it's outside the banks, a little bit different kind of protection style, but people looking for interest rates are going to a lot of kind of unusual, not everyday pieces. Now, it's not that these things haven't been used for that in the past, but people are starting to consider some alternative kind of investing other than just the stock market. I mean, looking at annuities, even fixed annuities, pure fixed that look and smell like CDs have been a bigger interest recently as well, because people are saying to themselves, market's kind of recovered. This might be my one time to get out and kind of say, oh, I missed that whole horrible experience. And goodness gracious, if this vaccine doesn't come out and, if the COVID-19 mutates or, whatever the story is that you're fearful that might happen, that's this is kind of like a lot of people's second chance. And I think that's going to be something that becomes a reality for a lot of people in getting out of the market. And I'm seeing it generally, but the average Joe is not right now. But some of the bigger firms are really taking a cash position looking for opportunity on a pullback.
Folks, it has been a pleasure. Thank you for hanging out with us at Money on Tap. And there you have it. These are the 7 deadly signs you need a financial advisor. If that is you, give us a call. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And again, Ben and I are both fiduciaries. Brayshaw Financial is our planning firm, and we love the opportunity to work with you. And hopefully you enjoyed the ride with us today, and what we've been talking about has been hitting home for you in some way, somehow. Or if it's not, it's somebody that you love and you care about. And that's a great conversation, a great way for you to go ahead and share good information with them. You can go ahead and share the podcast, or you can just tune in wherever you're listening to us on radio.
Thanks for joining us today. You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Also, we're in a podcast. You can find us at any of the podcast venues out there. We appreciate the likes and the listens. We're also at Facebook at /3D Investing and Twitter at BFG_LLC. We appreciate you joining us here today, and we hope you make it a great day and a great life. Thanks for joining us with Money on Tap.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.